possibly targeting this gap all the way here around $100 in American Express. So that would represent a 30 to 50% decline. This is another window into what I think will be a huge decline in the indexes. I'm looking at the S&P 500. This is a weekly chart, and when I look at this chart, I see three major bear patterns suggesting that this market has still got a long way to go on the downside. Now, I listen to analysts all day long. Most analysts are saying that the June lows will be the low for the year, that we will not take this out. And there are many analysts that are projecting that the S&P is going to go and make a new high by the end of the year. To me, I don't see that in the charts. What I see is three extremely bearish price patterns. Here is the ascending, broadening price pattern, where we draw the lows this way, draw the highs that way, and we have an ascending, broadening price pattern. You can see we banged exactly on the nose to the lower end of this pattern, and that marked the end of this bear market rally. Within the context and confines of this ascending, broadening bear pattern is also what I see as a double top. Very simply, it looks like there are two peaks here. It looks like an M top. We basically banged right into the neckline, and now we are cratering lower. So if that weren't enough, here in my mind is the third major pattern that the S&P 500 has traced out. You can see how exactly the highs bumped into each other along this declining trend line, and how the lows conjoin to create this megaphone top. And it just does feel that we're going to crash to the lower end at least of this megaphone top to the 3,400 price level in S&P, but I do not think that it will stop there. I think once this is in motion, it will go a lot lower than most people are expecting. So I know I remain in the minority camp in my views that we are likely to get a precipitous crash in these indexes, but that's, in my mind, my interpretation of what the charts are telling us. And as you can see, I have accumulated a position in anticipation of my views and interpretation of the price action in these stock indexes. So it's very difficult to single out any one stock that I think you should look to take advantage of this decline. Basically, I think the way to take advantage is just take a position in the indexes, short the Qs, short the IGV technology index, short one of these ETFs, which gives you a broad participation. But just to give you an example of one of the stocks that I'm looking at, this is American Express. And as we can see that there is huge amount of what I call distribution going on in all of these stocks. You can see that we formed a double top and a complex head and shoulders. So here's the double top, and then you can see that there are a number of different shoulders. So this has formed a long-term distribution. This is the stock of AXP, American Express. This is a weekly. I do think that the American consumer is going to be in trouble. There is record credit card debt, record low personal savings. So I do think that the consumer is tapped out. And I do think credit card companies like MasterCard, Visa, American Express are going to suffer a consequential decline as a result of that. You can see that we are also sitting on this neckline for American Express, and any penetration below here will take us back to this 130 area, and then I can imagine a lot lower than that, possibly targeting this gap all the way here around $100 in American Express. So that would represent a 30 to 50% decline in this stock, and I do not think these kind of moves will be out of context for what I foresee happening over the next couple weeks in the U.S. stock markets. The other big story in the last couple of weeks is the US dollar has hit a 20-year high on the dollar index, and certainly against the euro. You can see that this is the euro versus the US dollar, and we are trading now under parity, 99.5 euro to the US dollar. And we have certainly just seen, since this huge double top head and shoulders bear pattern formed, just a waterfall effect in the euro versus the US dollar. But despite the fact that we've fallen very far, very fast, based on the fact that we broke these long-term monthly lows around the 105, I think that there is a lot lower to go in the euro versus the US dollar. I do expect to see this currency under 90 cents to the dollar in the not too distant future. So while the dollar has gone on a sprint, on a tear, I don't foresee that it's going to stall out anytime soon. And the strong dollar is also a headwind for most international S&P 500 companies that have to repatriate a lot of their earnings back into a stronger dollar, which results in a hit to earnings. A company like Microsoft comes to mind when I think of something like that. But the stronger dollar negatively impacts a lot of S&P companies and represents a significant tailwind, which does not look like it's going to abate anytime soon. The next asset class I'm looking at is precious metals. This is spot gold. The ticker symbol is XAUUSD. This is a weekly chart, and I do think that higher interest rates and a stronger dollar will continue to be kryptonite for gold. Both the fundamental and technical background for gold suggests that we are going to see, I think, a massive decline in spot gold over time. We've been watching gold traverse within this massive ascending, broadening price pattern for many months now. You can see that there's a huge double top right at the 2100 level, and then more recently you have the double top and head and shoulders in the more recent time frame. I said when we cracked this 1800 level right here that this was likely the beginning of the end for the upsurge in gold. I did expect a retest when we broke through here. That's exactly what we've had, and now you can see that we are re-challenging this 1700 area, and I think that we're likely to go much lower. So I think that you can get short gold anywhere here, put on a very, very wide stop loss, take a very long-term view. What we know about the ascending, broadening price pattern is that prices typically retreat back to the beginning of the pattern. And if that's the case, we can then see that gold is going to potentially come back to this 1200 price level. So it seems just incredulous at this point, but I've learned not to question the charts and the implications of price action, and so I do think it's entirely feasible we could see that kind of decline in gold over the next couple of months. So with that said, I want to wish you a great rest of your weekend, a great holiday weekend, and I will see you back in about a week or so. So have a great time wrangling with this market. I think we're gonna see rock and roll probably right on the opening on Tuesday, following the huge reversal on Friday. So I'm expecting all kinds of fireworks, and nothing's going to surprise me. So you can see, 45 is 1.3 million.
$1.3 million short.
So pop out a profit for 118,000 there. So you can see how it's going crazy now. You can see how the market just going nuts. I bet like $1.6 million on this position. I'm showing right now $23,000 gain.